Let's get into it. It's Wednesday, the 11th of February, mate. Gonna go over today's trade. I took another long on the S&P and another loss, and I'm gonna get into my reasoning for taking it, what I did wrong, and what I have learned, because ultimately today was a little bit clumsy. It just was. It just was. So in terms of what we had, uh, for what we were looking at, drew out the 8 o'clock 15-minute candle as usual. I've got all my notes here as well and a few other setups that I was looking at. And as you can see, before the AM session, price ripped above that candle, and ended up going up to this high here, which, as we marked out earlier in the week, was another draw on bullish buy side liquidity. And pretty much from there, price also rejected from this level, and a rejection model would have taken place. If we go onto the 1 minute here, this fair value gap would have been a lovely entry to go for a 3-to-1 or etc. From that rejection. As you can see, the 1 minute candles all closed below it, that high. 3 minutes all below it, 5 minutes just wicked straight off it. One of my reasons for not taking this was because I was a little bit hesitant in the fact that, we still had this high up here, which is on the 4 hour already been swept. So yeah, so that's a mistake there. Well, not a mistake. It's still like relative equal highs here. But nonetheless, uh, I had my buy limit set at this point, at the midpoint, and the price didn't come down until about 10 past 10 Eastern Standard Time, and then pretty much just pumped straight through my stop loss. My take profit would have been, just below this 1 minute fair value gap, which, even just me saying that, it's not a strong draw. A 1 minute fair value gap is not a strong draw. There's a 5 minute one here, but as you can see, we got this wick down here. On the way down, I was thinking, that short would have been a better choice because we did just see it move down. I could have been out. I'll go over this trade in a sec. We also had a 3 minute fair, 15-minute fair value gap right here, and I was anticipating maybe price going to hold above this level, and I just had the buy limit set, and it didn't. It just went straight through the buy limit. Quick pullback for it would have been running like 30 quid profit, and then stopped me out for 48 pips, which is what we're going to say is 5 points, because it would be 4.8 points. So yeah, this trade, it would have looked something like this with the 2.05. So we were looking for £389 profit for, no, it would have looked something like 1.9. Yeah, so it looked like, it looked something like that, but we got stopped out for £119.44. And you can see there 4.8 points within a minute. So yeah, it's one of those. My notes today, it's one of those. We'll come back. It's still absolutely fine and within the risk management parameters. And one important thing to note here is we also had the previous daily low to previous daily high model play out before the AM session opened. So if we get the previous daily highs and lows, that's this green line and the red line. And the typical formation of this is the inverse fair value gap, the breaker structure, the fair value gap above that, retrace into that, enter, stop below the inverse fair value gap, target the opposing liquidity, and that would have slapped for 3.83 to 1. So I think, seeing that play out plus the rejection model, I was just thinking, a lot of trades going to make sense today. And yeah, I was wrestling with the idea of closing or cancelling this buy limit here, but nonetheless, the entry criteria was still there. And it's just like, What did I put in my notes? Note how different this loss feels compared to yesterday. Although I used the same entry criteria, the context of the market did not match the trade, which is true. Yesterday we had all these highs and a clear bullish bias. Price had already filled this imbalance and then gone up. That was the move up. Whereas today, it traded down into this area that didn't look as attractive to trade down into yesterday. Although that wasn't a PM session, it came down. And then we've rebalanced in the Asia session. London high and Asia high got absolutely knocked out before the AM session even opened. So, it's just one of them. Learn to be patient. Um, yeah, I think this one was a bit more frustrating, not because of the money. It was just like the fact that, like I say, yesterday everything made sense to take the trade. Today I had feelings that it wasn't the right choice to take the trade, and it wasn't the right conditions to take it, considering we'd already had these play out. And nonetheless, I kept the buy limit in anyway, in the hope that price would reverse off of this fair value gap and either hold above the 8 a.m. range or tap the midpoint, and we get a bounce from there upwards. So yeah, it's one of those. If I want to see my exact notes at the time of the loss, clumsy trading today. No need to be in it. Previous daily low to previous daily high model played out before the market opened. Price didn't come back to the midpoint until 10 past 10. My thoughts for this are that I didn't need to be in a trade due to the immense selling pressure after the high was taken. That's up here. And I almost cancelled the order multiple times and still just left it. Just clumsy, unnecessary. And, I didn't have strong draws on liquidity, especially, like I say, Asia high, London high had already been taken. Yesterday's AM high had already been taken. And the only high that was really worth, targeting was this high here, which is unlikely, especially when when the AM session, Power 3 has come up and absolutely ripped downwards. But yeah, nonetheless, the risk was managed. It's still fine. We're still up 131 for the month. And yeah, I mean, it is what it is. So tomorrow we have unemployment claims. Like the actual unemployment rate had dropped today, which was good. It was, bullish at first for the market. That is what sent price up before the open. This dropped at 1:30 p.m., which is 8:30 New York, I believe. Is that right? Yeah, 8:30 New York. Bullish news, bang, big up candle, sweep the high, sell off. Simple as that. But yeah, it's just one of them. It's a bit of greed, bit of impatience today, and really, I let my mind get the better of me. So Nasdaq, I didn't really look at it today. I was mainly just focused on one chart, and yeah, I think what I'm gonna do is I'm gonna remove a bunch of the drawings off the chart just so I can look at it with like a fresh, clean slate. But this is one of the days where, going into my monthly review at the end of not next week but the week after that, I will be noting this like on my summary page. Like it'll be one of the learning points here. So yeah, just the difference in losses and how I feel between the differences. I think how I felt before getting in the trade is the main factor to determine whether I should be taking the trade or not. Like I was getting a little bit nervous. I knew that it was a lower probability setup and just left it. So yeah, it's one of those. Just for confirmation, that's how the month is looking at the moment. So yeah, we've taken 5 trades this month. Yesterday was a bit of a shame. Just got it wrong, and we were still right in the idea, but today we just got it wrong. So we take that, we move forward. I'm gonna have another look tomorrow, because ultimately, even just like winning another 3-1, that covers the 2 losses and also puts us up some more from last week's trade. So yeah, in a sense, it's okay because we had a little bit of I had a little bit of a buffer, but don't let that. I need to make sure I don't let that act as an excuse to be reckless. Do you know what I mean? Um, but yeah, overall, I'm just going to cover. This is just going to be what I cover today. I'm not going to go over gold or anything. I haven't touched it today. Um, and yeah, we'll see what we get tomorrow, and I will catch you then.